The price action currently in Bitcoin is reminiscent of the 2016 halving cycle. We can see that green line just over there. That's the 2016. Now, when the 2016 cycle hit this period of time, we saw negative price momentum. We also saw it in the 2020 cycle. And currently, we're seeing it in the 2024 cycle. So should we be concerned? Well, let's run the numbers and let's find out. Hi everyone, I'm Ken from CryptoTradingKS and the CTKS Method, wishing you a very Merry Christmas and a great festive season. When we look at Bitcoin, currently we can see it's been coming down, but we need to look at structure to understand why. I'll just put on the structural indicator from the service. This gives us a bit of an understanding as to where structural resistance levels are and structural support levels are. How dispersed they are, how strong they are, how clustered they are, or how far apart they are. This is incredibly important information to know. I'll just put some labels on here so you can see the prices. As from the last video, we said that 95,786 and 99,934 were the key levels. That was just around here. Now, what did we see across the past couple of days? We saw the 95,786 hold until this point. Now, what happened there? If you've been doing the cheat sheet, you absolutely know what caused that. Please let me know in the comments if you saw the signal that led to this sell-off before it occurred. Now, the two critical levels that we need to keep our eye on in the next 48 hours are the 95,786 and the 92,732 levels. If we get above 95,786, we would expect bullish price action. And when we get above 97,180, the movement up towards 99,934 is not that difficult. We always assume three-dimensional thinking, so if we don't go up, what happens if we start to lose structural support levels? For example, if we lose this 93,684, we would expect to get caught by this very strong structural support level at 92,732. And it's a good thing to note that the 93,684 has predicted structural support rather well. In order to understand the direction and momentum of the markets, you can't just look at Bitcoin's price. A lot of people would just say, I'm just going to look at Bitcoin's price chart to figure out where Bitcoin is going. This is a huge mistake, and I'll prove it to you. All financial markets are intercorrelated and interdependent. And one thing that you must be aware of directionally, the Bitcoin and the S&P 500 are directionally correlated. Now, what does this mean? If Bitcoin is going up, we would expect positive momentum inside the major indices. But if Bitcoin is coming down, we would expect negative momentum inside the major indices. And what did we see recently? Just over the past 24 hours, we saw a big sell down in the S&P 500, inside the Nasdaq, inside the Dow, and inside the Russell. Bitcoin was confirming that negative price momentum. If people say the stock market is decorrelated from the crypto market, just look at them and say, you don't really understand financial markets. And financial markets are incredibly complex. This unfortunately means that if people haven't done finance degrees, they'll offer opinion about financial markets, but they're probably wrong or incorrect because they don't understand how complex they are and they're run on mathematics. What I'm just showing you here is how lazy the stock market is. You see these horizontal lines, that's when these particular stocks are not trading. And have a look at Bitcoin. Bitcoin is trading 24 hours a day, 7 days a week. And what do we see? The momentum inside the crypto market is a risk-on or risk-off indicator. And it's a very important one to keep your eye on, even if you've not had any interest in crypto whatsoever. Bitcoin will throw an incredible risk-on or risk-off signal that you could take advantage of if you knew how to look at it. And that is what the cheat sheet is for. Always remember, you need to look at the cheat sheet from a structural perspective. The thing that happened inside financial markets in the past 24 hours was the VIX spiked up just cratering not only the crypto market but also the stock market. The VIX has been basing. It has a strong probability of turning around and more up spikes are expected. Just to give a concept of how the VIX spike impacted financial markets, you don't have to look much further than the heat map of the stock market. Look at this, pretty much everything was whacked around. That is the power of the VIX, and we also saw the US 10-year and the US 2-year spike up. There was not a lot of upward spikes in the DXY. Why was that? It's all about the Bank of Japan seeking to increase its rates. We know Bitcoin cannot escape the stock market's gravity, so what we've seen inside the crypto market is negative price momentum. That is directly caused by the VIX and the yields. And of course, as the yields went up, gold and especially silver got hit quite badly. Personally, I don't believe there's any cause for any panic. We're not seeing any capitulation at the current time. But what we expect around this time in the halving cycle is negative price momentum. This is actually a bargain. It's not something to be worried about, it's something to lean into. But of course, you need to know how to buy. Unfortunately, so many people think that they must be 100% invested, and they go from intuition and not science. Anybody who's done a finance degree would never go from gut feeling or intuition. They would have to run the numbers. Running the numbers allows us to stack probabilities, and we can already see around this time in past cycles, we've experienced negative price momentum. In the last video, I mentioned that there were levels that would be hard or difficult for Bitcoin to overcome. And we saw those levels play out, but those levels were not inside the Bitcoin chart. They were inside total crypto market cap. I'll just put on the structural indicator from the service to give you a concept of where that was. You can see at the 3.36 trillion, we had a lot of structural resistance there. We simply couldn't overcome it throughout the past couple of days, and we sold down. Of course, this was the point where the VIX spiked up, and that caused the markets to sell down. It perfectly coincided with structural resistance inside total crypto market cap. And looking at the same area on Bitcoin, we saw that that was also an area of overhead structural resistance, and then it sold down. It's so important to stack probabilities across multiple charts. If you're new to the community, a very warm welcome, and you're probably wondering what the heck these lines are. They're called SLs or Stanfield levels. They're also called CTKS levels. They represent the world's most statistically significant resistance and support levels. We can actually determine where structural gaps exist inside price action, and this is the world's only rightward-looking or forward indicator of price. It just basically tells you where price can come down and consolidate, or will price will reject from and get gravitationally attracted to lower structural support levels. It requires 2 levels of standard certification, level 1 and level 2 standard certification, to draw these levels up. The key is, where is crypto heading in the next 24 hours? And what levels do you need to keep your eye on? One of the undoubted levels is this 3.17 trillion. Remember when we were talking about that overhead structural resistance in total crypto market cap? It caused the whole market to hit a wall and to come down. The 3.17 trillion is incredibly important, as is the 3.14 trillion. What we'd anticipate if we get continued negative price momentum, we would expect to get caught between these levels for at least some time. Let's go back to Bitcoin and try to put a picture together. If we get this negative price momentum, we know that we have underpinning structural support inside total. Therefore, the 92,732 becomes a really key level to look at. If we drop through there, we could head to 90,632 inside Bitcoin rather quickly. This is a negative CTKS gap, and we're likely to have structural overshoot, but we've got support levels underneath that at 89,605 and 89,978. Remember, you make profit where you buy, and we're assuming that you go long at spot, that you buy it and you want it to increase in price. That's what we do inside our community. We don't go short. But because we know the levels, we know where we can lean in with more confidence and lean out also. Always remember that markets can move contrarian to what a lot of people would expect. So if the majority of people expect a negative price reaction, also keep your mind open for a positive price reaction. If we manage to get above that 95,786, we're heading to the 97,180 mark. That, of course, is not the dominant probability in the next 24 hours. But it doesn't mean it won't happen. Just keep flexible. One thing that I just want to share with you, it's a gift to get Bitcoin or any of your cryptos at lower levels, especially at this time in the cycle. It certainly doesn't feel like that, but that's how I'm viewing everything at the current time. Please note that the Profiting from CTKS Method Structure course is now open. And week 1 is now open as well. There's a lot of fun stuff in there. Week 2 will open 7 days after week 1. And just a heads up to the students, there was a minor glitch in the row 1 to row 7 templates. Row 6 and row 7 had some issues that's now been rectified, just to let you know. If you would like to pop across to ctksmethod.org and just scroll down, you can see that there is a free cheat sheet just right here. The cheat sheet is what I'm talking about. The cheat sheet will give you so much insight into financial markets, and you would have seen the VIX and the 10 and the 2-year spiking upwards in the last session, and that was responsible for pulling everything down. When the 10 and the 2 spike up, that will cause gold and silver to spike down, and that's what happened. Of course, when the VIX goes up, it will decrease junk bonds, and the combination of row 1 and row 2 will throw pressure, negative pressure onto the major indices, the stocks, and Apple was at a very key level of structure in the past 24 hours, and unfortunately it failed. If Apple had have rallied, the stock market would have done incredibly well. Instead, Apple lost its structure and the entire market suffered. All the indicators for the cheat sheet are available through the Method service. The Method service will give you an insight into how you can use this cheat sheet and profit from financial markets as a professional and not retail. It's really important to keep your mindset really positive. And if you go across to CTKS Mindset, you'll see a lot of different videos in there. And from the homepage, there are a lot of different trades that I share as well. Have a great day or night ahead, my friends, and a beautiful weekend. And I look forward to catching up with you in the next video. Bye for now.